Hi traders and welcome. Today we are going to look at the anchored Vwap, how to correctly plot it on the chart, why it's better than moving averages, and several strategies we can use and apply to our trading. Anchored Vwap is available on TradingView. Search indicators and hit the add button. It will show up in Trendline Tools. When we select the anchored Vwap, we must select a price to anchor the Vwap to, just like this. Vwap, or volume weighted average price, gives the average price a security has traded at. On the chart that we have up, the blue line is indicating the standard calculation for Vwap, which uses the current session for all of its calculations, whereas anchored Vwap allows you to anchor the calculation based on any point on the chart you would like it to start at. One of the main reasons the anchored Vwap is such a popular indicator and so reliable is that banks and large traders have developed sophisticated order execution algorithms in order to achieve an average price equivalent to or better than the Vwap. In an uptrending day like this, these algorithms will issue slow buy orders to bid the price once it reaches the Vwap. The same goes for the downtrending days. In the downtrends, when the price begins to move back up to the Vwap, these same algorithms will issue sell orders at or around this price. Anchored Vwap is superior to the standard Vwap because of the calculation period. Standard Vwap calculations start with the first bar of the day and end with the last bar of the day. But anchored Vwap allows us to anchor the starting point to any price bar. With standard Vwap, we can only use it on intraday charts, but anchored Vwap can be used for multi-time frame analysis. Looking at an example on the hourly ES chart, I can anchor my Vwap to a major swing low and monitor the price action as it retraces towards our Vwap level. Once we break through here, there is no bullish candlestick formation giving me a long entry, so a change in trend is likely. After some time, price begins moving back up, this time from below our anchor Vwap to test that price. A small double top gives us all we need to initiate a short position. So to trade the simple pullback strategy, we take our Vwap and anchor it to a major swing, determining the trend, then waiting for the price to retrace back to this Vwap level before looking for long entries. In these two examples, signified by the two green boxes, we notice a band of support off the Vwap line. In this case, it's far better to wait for some support to act off the line before taking our long entry, instead of just simply placing a long order at the Vwap line. The same goes for short entries. A general rule of thumb is if the price is trading below the Vwap, we're in a downtrend, and if the price is trading above the Vwap, then we're in an uptrend. In this example, we had 3 strong entry confirmations to take a short trade. A bearish inside day candlestick pattern off the Vwap here, and an inverse hammer confirmation off the Vwap here. When price is trading far away from Vwap, for example, below as in this case, we could look to buy the contract with the expectation that the price will return back to the Vwap. I am using the NQ chart, and if I measure the distance from the swing low over here back to the Vwap, we're sitting at a roughly 320 points away. In some cases, this could be even higher. This strategy is going to have a higher probability of success in range-bound days instead of trending days. We see here too that once price reverts back to our anchored Vwap, it finds resistance and selling pressure there. This is why it's very important to anchor our Vwap to major swings and not arbitrary price levels. The anchored Vwap line can be used to confirm trends, if either the bulls or the bears are in control. It can also be used as a support or resistance level where we can begin adding to our position or reducing risk. As we have already discussed, the aspect that makes the anchored Vwap so interesting is that we can decide on our own starting point. If we select major swings to anchor our VWAP, most likely we would be selecting the correct starting points. In this example, we anchored the VWAP to the highest high on our 4-hour chart before the downtrend began. There are two more excellent entry points that would have given us over 1,000 points each. Moving averages have their place and can still be a useful indicator in identifying trends. However, when using VWAP, we are not calculating the average price as the moving average does, but calculating average price weighted by the total trading volume. This gives us more information to work from, especially if we have periods of higher than average volume. On this recent impulse move on NQ, we have anchored the VWAP to the most recent low before the up move began. Notice how quickly it tracks the price compared to the popular 200 EMA in blue. The problem with moving averages is that we are forced to wait a long time for it to confirm a change in trend, even if we see the trend has already changed. The anchored VWAP alleviates this again because of the fact that we can decide on the starting point. So let's take a look at an example used in the anchored VWAP if we wanted to look for some sort of day trading setup. Of course, day trading means that we're going to have to lower our time frame, and in this case I've got a 1-minute chart up open in NQ. There are many techniques that we could use when we use the anchor VWAP in day trading, including the previous ones discussed, such as looking for support and resistance zones, buying or selling off of the anchored VWAP as price retraces back into it, or simply just using it to identify trends. But in this example, I'm going to show you what we can do if we take our VWAP and anchor it to the first candle of the day. If we take another VWAP and anchor it to a swing high, you'll notice that we form a band. Price has mainly been trading above this VWAP band, which is showing us that the overall trend is up for this session. In this case, we would be looking primarily for long entries, either if we wanted to go with the trend on pullbacks, or we could potentially look for short opportunities with the expectation of reversion back to the mean. We could also be looking for situations where price retraces back into the VWAP zones and look to take buy signals at these levels. At some points, the price does fall further below our zone and gives us a false entry. This is just something we need to accept in trading. Not every setup is going to be a winner, but if you have a good system and good risk management, then any system will be profitable and successful for you in the long run. Once we've decided on a point to anchor our VWAP, we then monitor the price, and in this example we notice that the price has been trading above the VWAP zone for some time before finally retracing back to it. In this case, we are actually looking for the price to break below the VWAP level as we see here, then go back above it, and then eventually go back below it. And once it goes below it, it needs to take out the previous low that it made once it first broke the VWAP level. This is indicating that the bears are taking control from the bulls because the buyers have tried to bid this price back up but have failed to do so. This is showing that the trend is most likely going to change, and from here we're looking for short entries only. Important factors to keep in mind when trading any trading strategy. Risk management. When used correctly, it will determine our success as traders. We can have a perfect system on paper, but a poor method of managing risk will render our strategy useless. Overtrading. As traders, we are not always going to enjoy green days. It's a fact of the business, so the quicker we can accept that, the quicker we are on the road to profitability. Emotional trading. Greed and fear are the two emotions that push markets around. At any moment we experience one of these emotions, we must remove ourselves from our trading desk. If this means we do not trade for weeks on end, then so be it. We must develop a calm and resilient mindset in all things we do, especially when it comes to trading the markets. Trading with no plan. A trading plan is a written document that outlines our strategy. It defines how, what, and when we will trade. Our plan should include what markets we trade, when and what time frame we will be using for analyzing and taking positions. Our plan should outline our risk management rules and should outline exactly how we will enter and exit trades, both for winning and losing positions. If we don't have a trading plan, then we are taking unnecessary hopeful trades. Create a trading plan with a solid routine that puts you in the right mindset before each session. This is just one example of the many strategies you can use at OneUp Trader. In fact, there are no restrictions on how you can trade with us. If you have what it takes, then you can be fully funded within 15 days after signing up. Don't take our word for it. Look through the various testimonials, trader interviews, and funded trader withdrawals on our YouTube channel. You can find everything you need on our FAQ section, and you can speak to our support team, which is available 24/7. Track your trading performance using our advanced account analytics feature. Discuss trading ideas with other traders on the members area and Discord trading room too. Don't risk your own capital in the markets. Rather, prove your trading ability with OneUp Trader and enjoy a risk-free funded trading account. Click the link below or go to oneuptrader.com to find out more.